Welcome back to Metropole TV, The Smart Investor. My name is Ali Khan Sachu, and no, we haven't got a gremlin in the studio. This is Ian Kagiri from Cytonn. Ian, it's a pleasure to have you here with us this evening.
Pleasure's all mine.
Ian, if you look at the banking sector, that banking sector and Safaricom have been underpinning the performance at the stock market, right? From my understanding.
True.
So tell us, you put out this report over the weekend about the first quarter. What banks do you want us to focus on? What trends do you want us to think about? And whom should we be backing with our hard-earned moolah?
As you correctly stated, we released our report during the weekend, and it highlighted the performance of the banking sector for the first quarter of the year. So some of our topics, as per our analysis, were Diamond Trust Bank.
That's year-to-date's down.
Yeah.
You think it's a value proposition?
Value proposition, trading at huge discounts to the market.
Yes.
So
on a P or price to book, or
on a price to book, it's currently at 0.6 times book.
Wow. So that's probably the cheapest I've ever seen it.
Yeah, true. Yeah. And I think the market.
Why is that?
Yeah, I think the market may be punishing Diamond Trust a bit due to their possibly their low payouts.
Yes. Payouts. The dividend. They're very mean.
Yeah, they're very mean on dividends.
But they like to recycle they like to recycle the EPS into the balance sheet.
Into the balance sheet, and I think for most investors, they are not seeing the result of that.
Are our investors overly obsessed with dividend payouts at the expense of capital gain?
Yeah, I would think so. Mostly for the large investors, and even so more for the retail investors. They tend to focus more on dividend because of the periodicity of the income.
Yes.
I think with an ROE of 13%, dividend yields of 1.92%, I think investors do not find it as attractive as other counters.
Because there's some banking counters which I saw last year were like nearly double-digit dividend yields.
Yeah, Barclays is a good example,
yes.
Really. Dividend yields of upwards of 10%. Almost.
So why wouldn't you? Isn't that a no-brainer?
Yeah, it's a no-brainer for investors, and I think
is that one of your recommendations as well?
Yes, Barclays is also one of our picks. We also have Equity Group.
Yes.
And KCB Group.
Okay, so let's talk through those three. Barclays, what do you like about Barclays?
Barclays, we like how they are diversifying their revenue streams.
This is the mobile-based
Timeza app. We do believe that it presents a very good growth frontier for the bank.
And are you comfortable with this disengagement from Barclays PLC and the whole ABSA strategy? Are you comfortable with what you're hearing from them?
Yeah, actually do believe it's a very good value drive for the bank because it will remain unshackled. You know, previously they were unshackled in terms of they won't engage some of these businesses. But we do believe that...
So you think it's an unleashing of Barclays Kenya?
Yeah.
So you're bullish?
Yeah, we are bullish on Barclays.
Okay.
Yeah.
Then you were talking about Equity Bank and KCB. Shall we start with Equity? Because there's been a lot of activity. They had the buyout of Atlas Mara, which gave them how many new countries? Three new countries. Then we've had the announcement of Ethiopia
as well. Yeah.
So for you, is Equity, what's bullish about Equity?
Equity, we are bullish on various things. Their digitization drive.
Yes.
They have very many alternative digital transaction channels.
Are they the furthest ahead of the curve in digital?
I would say they are closest.
CBA, maybe.
CBA, maybe, yeah. CBA would be their closest competitor. KCB as well, they've tried to close some ground on them as well. We do feel that Equity, if they would drive their digitization strategy across these new jurisdictions, then they would be able to create a lot of value.
Because, Ian, when I looked at the full year results, the subsidiaries were doing pretty well, except for Tanzania. But that seemed to be a common narrative for everybody.
For all the banks.
Everybody
for all the banks.
Banks.
Tanzania.
Yeah. Okay. So you're saying, from what I'm hearing, they can pull and plug what they've got here and make it work in all these other
in all these other markets.
Price to book today of Equity?
Around 1.7, 1.8.
So, wow, 3 times versus Diamond Trust?
Yeah, 3 times versus Diamond Trust, but they're also trading at a huge discount because historically they've traded at 2.4, 2.5 times.
And PE, what are they on?
PE around 7, 8.
Yes.
PE, yeah.
But okay, let's get to KCB, then we'll get to the more thematic. What do you think of KCB?
KCB as well, they've also tried to pursue growth inorganically. We have seen the acquisition of the proposal, or rather to acquire National Bank.
But isn't that like a pimple? I mean, when you look at the size of it, I mean, isn't it a distraction? It's like getting a fly somewhere.
Perhaps you'd say so, but we do feel that some of the critical government business may go.
Is that what the raison d'etre of that acquisition is? Everyone tells me, Ali Khan, they pick up all the cash flows for the government, and if you've got to pay your taxes, you've got to pay it, and that's the interesting part. Is that the cherry on the cake?
It may not be the cherry on the cake, because there's also been some push. NBK is government backed.
Yes.
And they've been struggling with capital a bit recently, so it may also have been a factor during the acquisition, given that both have a significant government ownership. So probably they may have used that to try and possibly remove someone who was struggling in the market.
Let me ask you one other question. Would you be buying into the CBA-NIC merger via NIC at these prices?
Via NIC, yeah.
You would?
We would.
You would?
We
okay.
Would, yeah.
And have you done some maths on that? What does that look like?
Our target currently stands at around 44 shillings.
And we're at what?
Around 30.
30?
Yeah.
And are you looking for those sorts of gains through year end across these ones you've spoken to me about, or is that a bit too aggressive?
It's a bit too aggressive because I think for these we'd have to wait, because mergers, as we've seen in the past, they may take some time before the synergies really do kick in and they drive the growth. So we may have to take a bit of time before they do see the synergies coming into play, improving efficiencies, growing the top line, so that you can see a realization really of the benefits of this merger.
Let's go to big themes, right? I mean, I was in the first half talking, Jude Njomo was pushing back. I don't know if you heard what he said. He said something like, they can keep trying, but I'm not listening.
You won't listen, yeah.
And it seemed to me that it's a political issue, right? You've got to win. You can go and say whatever you want in Parliament. You've got to go and win that argument in Parliament. Does Henry have the weight to carry the argument now?
I doubt so, because they've been proven. The members of National Assembly have proved to be very adamant, and they've maintained their stance. But we do feel that the mounting pressure may weigh in at some point, and we are likely to see some form of review on that law.
Modification?
A modification maybe, possibly increase the margins, something of that sort. But I think they'll have to make a compromise at some point.
And if that does happen, do you think the banks have gotten complacent? Because if you look at all the banks, all I see is the amount of Government of Kenya securities going through the roof. Are they able to pivot?
So an interesting thing is, if you look at some of these large players, they've been buying mostly into the liquid government securities. So this has seen them maintain higher levels of liquidity. So they are possibly positioning themselves to perhaps deploy capital as quickly in the event, of course, of a repeal, which would present very, very many opportunities for them. So, however, something like the cost of credit, so some banks may use that window to try and gain market share, because they would want not to be priced out by their peers, especially the large banks. So we may not see a significant increase in credit prices, because some of these banks might actually maintain the low levels of cost of credit to try and gain more market share from their peers.
Digitization has been a big theme, right? I mean, I listened to some of the results. 97%, I think Dr. Mwangi said, of my transactions are happening on digital, right? That's amazing.
Yeah.
That's a revolution.
True.
Who is in the lead for you? Is it equity? Is it CBA? Is it just those two? Is it KCB? Or is everybody embraced this new world?
I'd say at the moment equity stands way ahead, because they ventured into the market earlier on than most of their peers. So they have very many channels. Equity is the Equitel as well. The equity EasyBiz for some of these businesses. So they are way ahead of the curve. But I've seen KCB has been aggressively chasing among them. And KCB M-Pesa actually has a lot of activity. But if you look at the NFI numbers, then equity, I would see, presents the largest growth or prospect, because they have the capacity to deploy these in another market. We did see Congo. Congo
up 100%.
Up 100%. So it's a very, very attractive frontier for Equity Group, because I do feel that we are yet to see the true potential of Equity Group.
It's an incredible story, really. Incredible. I remember when it was introduced via listing at the NAC, and really has done well. Congratulations to them. Let me ask you something. You know, we were speaking before we went on live that, you know, if you compare Kenyan banking stocks to Nigerian banking stocks, those Nigerian banking stocks look so incredibly cheap. Price to books are 0.4, 0.5. I mean, what's going on? Should we look at that comparison? I mean, if you look at that comparison, you think to yourself, I better go to Lagos and buy some cheap banks.
Buy some cheap banks.
Why, first of all, why have we got that distortion? I think it's the third worst performing stock market in the world under President Buhari, down 50%. It's had a torrid time. But is there value in Nigeria, or am I missing something?
I think in Nigeria, as you correctly stated, the counters are trading at huge discounts, the large banks as well. What you'd see is that they experienced quite more heavy outflows from foreign investors than what we did experience here in Kenya. And I also think that if you go to Nigeria today, most of these large banks are recording double-digit profit growth, and also the large banks as well. So I think that the market is pricing in possibly the expected slow economic growth, because they tend to be more affected by the performance of crude.
Yes.
So crude, given that. So given the downturns, then I think the market is pricing in that effect. So that means they continue to trade at larger discounts than what we see in the Kenyan banks trading at. So it's a very, very attractive market for frontier investors.
And your top pick in Nigeria would be
Zenith Bank. Zenith Bank.
Were they the ones? No, that was EcoBank did the Eurobond recently, right?
Yeah, EcoBank.
What about EcoBank? Does that look good value to you?
We've not rated it a buy.
Okay.
Yeah, we just it's a hold in our portfolio.
Let me root back now. So your top Cytonn pick in the banking sector is Diamond Trust.
Yeah.
Okay. Where's the share price right now?
120.
Wow. Big correction.
Yeah, big correction.
And where do you? What's your fair value target? What are you telling people?
220.
So nearly 80-90% you're talking about.
Yeah.
And you're saying that's just on investors understanding the dividend payout policy better and a normalization.
Yeah. So actually, in my view, I do expect, perhaps I do feel that Diamond Trust may be the next bank to have a capitalization issue.
Capitalization issue?
Yeah. So I do feel that...
a rights issue?
Yeah, rights issue. Not a sort of a bonus issue to try and improve...
okay. The liquidity.
The liquidity of the counter, which may actually go a long way towards improving as well other valuation metrics for the bank. Yeah.
And explain to everybody, you know, because a bonus share is, instead of having 10, you now have 11.
Yeah.
But the value is
the same.
Is the same. But then why do we get these very interesting movements? People seem to like bonus shares here. They put a premium on it.
I do feel it's more of a psychological...
this is the quirks of our investors. They want dividends. They like bonuses. What other observations have you got about them?
Dividends, capital gains, not so much.
Not worried.
Yeah, especially for the medium to long term investors. They tend to prefer the periodic income. But for traders, obviously, they prefer a lot. They put more weight on the capital appreciation as opposed to dividend. But I think the main driver is dividend, because given that, for instance, in our market, you would see that at the end of the cycle, there always tends to be a rally towards the first quarter of the next year. That's normally the period of dividend declarations, annual report release, and things like that. So it may be an indicator of what actually investors tend to prefer in markets.
Ethiopia, we've seen Dr. Mwangi announce he's opening an office, we've seen KCB announce it, revolutionary telecoms privatization. No one ever believed that the Ethiopians would ever let anyone in on the telecom side. It was like a national, and admittedly, the internet's very poor.
Yeah,
and they need to get that out of their heads that they've got to. Is that 100 million market a massive opportunity for Kenyan banks?
Very massive. If some of these banks, they've been able to operate in an environment in Kenya, population is 50 million.
Yeah.
We have 40 banks, so the competition tends to be a bit more stiff here. But over in Ethiopia, it was largely more of the indigenous banks that used to operate there. So an opening up of this market presents a very, very huge.
Are we going to eat their lunch?
Probably. Probably.
Yeah. Right?
Probably.
Our boys have been working at all kinds of things. So you think that's, and do you think, at the moment, the representative offices, are they going to get a full license, or do you feel confident about that?
Yeah, the current regime seems to be more liberal. So I do feel that they do want to inculcate some of these global standards.
Yes.
In their markets, in activities, things like that. So I'd actually expect a lot of traction on that frontier. Yeah.
Okay, so now if you look wider, let's look wider. Things like Standard Bank of South Africa, we are like Equity and KCB are in a number of. They're similar businesses now, aren't they? They're trying to compete at a Pan-African stage,
level. Yeah.
Right? It seems to me, and maybe a little bit of the rate capping forced them out to compete more effectively externally. I think Dr. Mwangi said the same. He was deploying capital outside because he was getting a better return.
Yeah.
Winners and losers. Whom looks to you like, because at one time the Nigerian banks were coming, you'd see them advertising everywhere. Yeah. Next, you'd have the South Africans talking about ABSA, then they went quiet. Do you feel we're competing at a Pan-African stage?
We are covering some ground because South African banks, I'd say, are way ahead.
They're ahead?
They're way ahead. They have, if you look at the size of the balance sheets of these South African banks, are very massive. Nigerian banks.
So, but they've grown because that South African economy has been a big economy.
Big economy.
Yeah.
But the Kenyan banks are very aggressive, mostly pursuing the retail strategy in East Central Africa.
Yes.
So in these markets, you'd rarely see the South African banks venture into these markets. So the only banks you'd see mostly are the Nigerian banks, UBA, GT. But Kenyan banks as well have been very aggressive. Have Equity Group, KCB as well, Diamond Trust, and even I&M.
Yes, no, I've noticed that. And so overall, you think we got enough of a tailwind to bring the prices up this year? You think the banking sector is a place for investors to look at?
Yeah.
You're confident?
We are very confident on the banking sector. It's proven its resilience even in the face of very, very tough economic headwinds. For instance, in 2017, when the economy was on a very, very slowdown, a very huge slowdown, they still managed to record some very, very huge profits. Perhaps the only company that beat them was Safaricom.
Which of course also has M-Pesa, which is the most valuable component of the company now. Basically that's the one that's showing growth. So, and then of course we saw Facebook launch crypto
as well.
So the whole payments and financial sector is in quite a lot of change and disruption, right?
Yeah, true. And I think one of the key things that drove these was banks needed to focus on it to weather the effects of the interest rate cap. So they found themselves in a situation whereby they had to focus on alternative sources of revenue, given the inception of the rate cap. So I think it came in at the opportune moment. The digitization drive came in at just the right moment, whereby there was a lot of incentive for banks to push that source of revenue for them. Yeah.
Ian Kagiri of Cytonn, it's been a pleasure for the rat-a-tat conversation that we've had today. I really appreciate it, and we look forward to engaging in the future. Thank you very much for coming in and standing in for Caleb today.
Thank you.
It's much appreciated.
Thank you.
This was Metropole TV, The Smart Investor. My name is Ali Khan Sachu, and in the studio we had Cytonn's Ian Kagiri, who gave us a whirlwind tour of the banking sector, and he's saying that Diamond Trust has about 80% of price appreciation ahead of it, and he's recommending that, but much more, not only Diamond Trust. So thank you again, and thank you, and see you at the same time tomorrow on Metropole TV, the first 24-hour business news channel here in East Africa.